Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency while drinking a cup of delicious coffee. Now in today's episode, we're talking about what could be the biggest Bitcoin upgrade ever, blockchain gaming, Cardano news, and of course our usual 404 logic not found segment. But before we get into all that, let's kick it off with questions from the community from YouTube and Twitter. So I'm going to pull those up now. And if you want one of your questions answered, make sure you leave them down in the comments below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel down below, hit the little bell notification button, and you'll get a heads up whenever I post new content like this. So let's dive into these questions. Now, the first question is from Sandeep Sam. He says, "Hey brother, what's your view about Steemit?" Now, with Steemit, this is one of those things where I was actually an early contributor on Steemit. Like I posted stuff there, never really amassed much of a following, but I really liked it. It was a great platform. It was a really cool example of how a social platform could be created using and backed by blockchain technology, and obviously with a token structure. The only issue is that I think it got to the point where after the 2017 bull run, where Steem was very valuable, people made a lot on Steemit. When everything crashed, people just stopped using it, and it just wasn't ever popular after that. There were also some governance issues, and then you fast forward to this whole Justin Sun saga where Steemit kind of fell apart because of this acquisition or takeover from that team. I think things just really went beyond repair, and so now Steemit's just something that I don't use. I'm not saying it has no future, because I know there are people still working on it, but I think a lot of the original vision is now gone. And there are other platforms out there like Uptrend that's pretty solid. And obviously there are video content platforms as well that are pretty cool as well, like libraries. So there are plenty of things out there. That's just my quick and dirty view on Steemit. I don't hate it. I just think its day is done, personally, my opinion. Thank you very much for your question, Sandeep. Let's go to the next one. It says CBN9 Crate. Thanks, my dude, for the info about the Yubikey. Thank you for watching that video. What is the best model for crypto? And so this is in reference to Yubikey hardware keys. I have one here, hint, hint. There's some more stuff about this in the video today. But the best model for crypto, most models will do what you need them to do for crypto, but you're looking for something in the 5 series, which is the series that has the keys that are compatible with mobile especially. So if you're an iPhone user, you can use the Yubikey 5CI, which has been out for a while. I think it's around $70. They may have dropped the price since then. I have one of those. It's great. I use it for Evercoin, which I've made a video about as well, that has crypto exchange and crypto wallet application on iOS and Android. The iOS version does have access to Yubikey. The other thing is that this brand new key, which again we'll talk about shortly, is the Yubikey 5C NFC, which is the most compatible Yubikey that's ever been created. You can use it on your PC, your Windows machine, your Android phone, your Pixel phone, your iPhone, all sorts of things like that. This is by far the best key that I've ever used from them. So I would recommend for $55, you pick up Yubikey 5C NFC, just launched on the site, selling like hotcakes. I'll leave a link down in the description below for anyone that's interested. Of course, zero pressure, but that's the best model in my mind. So thank you very much for your question. All right, we've got another question from Ramon Martinez. So I'm interested in purchasing a cold wallet. I butchered that, sorry. I'm new to crypto and learning a lot, familiar with Ledger, Trezor, BC Vault. My question is in regards to hardware itself. What's the turnover? If I purchase one now, how long till a new model comes to replace it? That's a great question. Technology moves a mile a minute. We all know that. And so you know that there will be something that makes what you bought obsolete fairly shortly after you buy it. I will say though, the update cycle for wallets is actually a little bit slower than other technologies. Like it's not a mobile phone where there's a new thing every year. For example, the Ledger Nano S made by Ledger, that lasted a good while, probably several years before they replaced it with the Nano X, and they still make the Nano S as well. So it's not a situation where they get rid of the old thing. I actually still have the original Ledger wallet, which was literally a piece of plastic, like a USB key, that was able to sign Bitcoin transactions and hold keys. It was the most basic thing ever, and it still works. It still works fine for what it was originally purposed for. Obviously, with respect to having access to the old application. That being said, you can use a wallet that you purchase, even if it's not the latest and greatest, pretty much forever as long as the hardware lasts, given things like Ledger Nano X with an internal battery might not last as long in terms of its best operating capacity because of that battery. So you obviously want to just keep that in mind. There are different wallets that have different lifespans, but as long as you have your seed phrase backed up, once you get the latest and greatest wallet, you can just push your crypto onto that by restoring that seed phrase. So you're pretty protected in that regard. But these wallets should easily last you 5 to 10 years, maybe even longer, depending on what you buy. So hopefully that answers your question. If there's anything follow up on that, leave them in the comments below, and I will try and answer that there. Thank you. All right, we have Swoops asks, can you comment on the progress with taxes on staking? So there's nothing definitive right now in terms of guidance on how specifically in the US and even in some of the other Western countries in Europe, Canada, etc., how they're going to approach taxing staking revenues. There are two schools of thought here. The first school of thought is that the conservative approach is to claim staking revenues as income, right? So when you make, you get your payment for staking or baking Tezzies or for staking on Polkadot or whatever, what have you, that you claim that as income on your taxes and you get paid, or you pay taxes based on that, your income tax rate. Obviously, that is not something everyone wants to do or believes is fair. I personally don't think that that's a fair way of looking at it, but it's really tricky because there's no guidance. The other side of it is staking is treated as the creation of new property, which I believe means that when you sell that property, then you realize the actual sale, you realize the taxable income. And so I think that will likely be how the law starts to look at it, one of those two. Again, I'm not a tax professional and don't take any of my advice as fact because this is extremely nebulous, very opaque. There's no real guidance, and I'm speaking from only my notional understanding of how this stuff is treated. My recommendation would be try and make sure that you're claiming what you can in a consistent approach, right? So if you decide I'm going to claim this as income, continue to do that. If you're going to claim it as property, continue to do that. Work with your accountant or tax guy, whoever else, to work with that and figure out what it is that you want to do. But there are people that are pushing for clarity on this. Obviously, the Coin Tracker folks and Zen Ledger folks that do crypto tax software, as well as folks on projects like Cardano, for example. And then there are legislators like in Arizona more recently that have started to push for clarity in terms of staking and mining and other things that really we just don't know for sure how they're going to be treated permanently. So hopefully we'll get some sort of clarity. I know in the comments below there's going to be a whole bunch of people hating on me for talking about taxes, but that's the reality that we live in, whether you like it or not. So what can you do? Thank you, Swoops, for your question. And then last question for the day is from Gangesh Kumaran. How you doing? I'm doing well. Thank you very much. You've talked about Solidity, Cardano's Haskell language, but never about Viper. Isn't that a massive revision of the ETH language? And how does it stack up against the Haskell-based Cardano language? Yeah, that's a great question. I don't talk about Viper as much because I don't think Viper it's not used as much and it's not 100% ready for prime time. So it doesn't take a ton away from Solidity in terms of dev share and people using it for the real deal. But Viper, which is really derivative of Python, which is another sort of functional programming language, we're starting to see that trend towards functional, formally verified, really clear code, predictable code, which is very different than the imperative Solidity style that we have today. And that should eliminate some of the big issues that we have with, code going wrong, being difficult to audit, etc. And so Viper is going to be the crux of a lot of different applications on the newer Ethereum 2.0 platform. I think more people are going to use Viper than Solidity in the future, but there's still a ways to go before we get there in terms of maturity with the Viper language. But again, Viper, Python, getting the nomenclature there and seeing where it starts to match up. But you're right, it is a massive revision. It's a massive change to the style of programming and just another tool in the toolkit for developers. I don't think Solidity is going to go away, though. I think people will still use it. They're still going to support it. But I could be wrong. When we get towards the place where we have WebAssembly in Ethereum 2.0, you open up the amount of languages that people can work with. And so Viper will just be another tool in that toolkit. So thank you so much, Gangesh, and everyone for asking questions. Again, leave them in the comments below if you have them. And let's move on to the news. Now, right off the bat, I want to announce the winner of last week's Crypto Cloaks prize pack giveaway. I don't know why that's hard to say. And thank everyone who commented and made that video one of the most viewed Crypto Over Coffee videos ever. So thank you so much for that. And the winner by random draw, which I'll show here for transparency purposes, is Swoops. Just so happens I picked one of your questions and you got picked for the random draw. So big congratulations. Your luck is good today. I've already contacted you to claim your prize. And for everyone else who may not have won, make sure to stay tuned and get subscribed because there are more giveaways on the way more often. So make sure you are ready for that. Now, as we do every week, let's take a bit of a swim in the murky, muddy waters of Bitcoin's price. September has obviously not been very good for crypto as a whole, and definitely not for Bitcoin. Prices are down at what seems to be relatively solid support at the 10K level, but it feels as if Bitcoin is teetering on the edge of further losses, should the stock market, among other things, take a hit as well. What I think is interesting is that according to the Kraken Exchange's reporting arm, and so they kind of look at data and trends, Bitcoin has traditionally really not done so well and had a pretty rough September. The period leading into Q4 of the year has in fact been very rough for Bitcoin over the years, so that's an interesting trend to follow. Silver lining, though, is that despite the few drops below the 10K mark in general, Bitcoin's remained pretty strongly anchored to the 5-figure emotional support level that I think a lot of people look for at 10K. And at least I'm hoping that no one can ever say, last time to buy Bitcoin below 10K, or post Vegeta memes again. It's like this SNL joke that just won't go away. It's like overdone, overplayed, and just not funny anymore. But to me, my feeling is that there might be some major bad days in the stock market ahead, which, despite the narrative that Bitcoin is not correlated or coupled to stocks, usually means that crypto follows those price trends downward when it happens. Now, if you're dollar cost averaging and not trying to time the market, this should mean that you rest easy at night, you just play the long game, and you don't lose any sleep. And that's, of course, not financial advice, but maybe just something to think about. It's very likely in my mind that we remain largely sideways for the rest of the month of September. We don't do super hot, but hey, I'm basically always wrong, so we shall see. Now, I do also want to bring attention to one Bitcoin-specific piece of news this week that I found particularly interesting, and that is that this week, 2 Bitcoin crypto community members created and deployed what is believed to be the very first discrete log contract, or DLC, on the Bitcoin network, which is more or less contract code that executes on a given set of conditions. Now, this is, of course, akin to the concept of smart contracts that everyone has used as some sort of crowning achievement or crown jewel of crypto since Ethereum came into the scene, and many have tried to force fit this structure into Bitcoin over the years. However, this is the first implementation of some kind of logical contract that I think has a real value and applicability in Bitcoin. It's lightweight, it's versatile, it's verifiable, and it's not super congesting for the network. It's also not trying to do too much or promise the world in one piece of tech. Now, this particular DLC agreement that made the news was a $10,000 or 1 BTC bet on the winner of the election in the United States, and the DLC uses a tool dubbed Outcome Observer as an oracle to feed in the results to the logical check on chain, which will be a simple hash of Republican_win or Democrat_win hashed along with a nonce. Really clever, but strikingly simple stuff. You can view the code base for this implementation on GitHub, which is all in C#, and it's derivative of the work being done by Shared Bits, who has been developing this type of tech for a while now. In fact, the founder of Shared Bits, Chris Stewart, is one of the folks involved in the bet on the Bitcoin network using this DLC. The moral of the story here, though, is that this discrete log scheme for executing logic on the Bitcoin network is actually viable for making bets or assertions on fact or events in time and then executing a transaction, which could open up all kinds of new use cases and possibilities on the network. My biggest desire for this tech would be to find ways to safely execute the transfer of Bitcoin to an heir, or heirs plural, in the event of someone's death. So setting up sort of a discrete log contract trust, if you will. All on chain, all verifiable like any other Bitcoin transaction. That would be very, very powerful. It would be a killer use case, but of course it has its own challenges to handle and it would take some work, but I think it would be really cool. Now, this week, the popular blockchain gaming company and NFT wizardry company Enjin announced that it would be teaming up with Japanese crypto exchange Coincheck on the exchange's NFT marketplace launch. Now, this news in and of itself is pretty exciting and awesome because the more available NFTs are and the more that they're used, the better. And you know my thoughts on how NFTs will bring adoption. That being said, though, there's more to this story. Some of the NFTs on this marketplace will be portable and playable in select Minecraft servers, which, for those who are unfamiliar, is a popular builder video game, open world game with hundreds of millions of players active. This means that in-game items will be truly ownable and tradable on the outside world using NFT constructs and token constructs. Now, gaming is a multi-billion dollar industry, and Enjin is at the tip of the spear on that one, along with Phantasma, Theta, and more, in terms of bringing gaming towards blockchain and blockchain towards gaming. Now, this program itself could really catapult the awareness and usage of NFTs into the mainstream with a wide range of demographics who play the game Minecraft. Now, it is time for 404 Logic Not Found, and for those who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise kind of goofy or stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm, please do hit that like button and get subscribed because it tells the YouTube robots that you are enjoying the content and want to see more. So thank you for that in advance, and let's dive into it. This week's segment was really kind of a piece of cake to come up with because the story was basically already written for me. And you may know the famous, ever famous founder of Barstool Sports, David Portnoy, who is more often than not these days streaming about day trading and at one time day trading crypto as well. You might also remember that when the 1000% gains on Link ran out of steam and Bitcoin stopped tracking major gains, Davey decided crypto sucks and that he was no longer making money, and so he was out. And several comments from him indicated that he just doesn't care about crypto at all, and he doesn't believe in its fundamental value or importance outside of its investment potential. Now, of course, this is conjecture, but that's just how I felt. Portnoy was angry at crypto and preferred stocks that were still in fantasy land moving upwards during a financial crisis, yet in reality, Portnoy just bought the top, and so he ran out of steam. In a not-so-surprising turn of events, though, Portnoy has now come out of the woodwork yet again, claiming to love crypto and the people in the crypto community, which so conveniently coincided with the stock market bloodbath. I wonder why he's back, Crypto is a pretty stable and ready-to-run-again place. Maybe? Do you think? I don't know. Now, here's a part of his comment that we should all immortalize and consider. I quote, "I will be in crypto. My heart is crypto. But I just gotta figure it out." Now let's see how fast he gets back out of his new love, his heart, crypto, when it has another crash. Now these are the types of dangerous mentalities that we as a community have to protect new entrants from. He doesn't really understand crypto, self-admittedly, but it's not a get-rich-quick scheme. It's not a joke that you toss big money in without thinking. And following the hot spots at every negative downturn in the place where you were isn't really a strategy that many can profit from. Just because Davey touts only his gains does not mean one should heed his advice or strategies to get rich. 404, Logic Not Found. Now, one of the biggest news items of the week for me personally has to be the launch of the long-awaited Yubikey 5C NFC, the latest and greatest hardware security key that can be used to facilitate secure logins and two-factor authentication on all your devices. Now, a Yubikey is an indispensable tool for anyone who wants to secure their online accounts to the greatest possible degree, and it's been the only thing that gives me peace of mind given the prevalence of SIM swaps and other attacks that, quite frankly, can be devastating. With a Yubikey, you can ratchet down security for your accounts by requiring physical hardware key to be plugged into your device to log in, or even use that same device to calculate ultra-secure two-factor authentication one-time passwords inside the companion Yubiko Authenticator app. Now, the 5C NFC itself, which is the newest product and also the most hotly anticipated product from Yubiko, the company that makes these in the US and Sweden, because it's the most user-friendly of them all. It can be used on your smartphone and then your computer and then back again across your devices with NFC or near field communication and USB connectors within the device. Now, I was lucky enough to get my hands on one quickly as a gift from Yubikey, and it was well worth the wait for those who've been holding out for this model in particular. This video is not sponsored by Yubikey. I'm just a huge fan, and I've been repping them for ages just because I love them. So if you're interested in picking one up, they're $55 on Yubikey's site, which I will link up down in the description below for anyone who's interested. There is also some really interesting news for Cardano fans out there, as Charles Hoskinson announced a platform dubbed Girolamo, which would be a critical connective layer between the public Cardano mainnet and the enterprise-focused private Atala network built by IOHK as well. Now, continuing the clever nomenclature for Cardano's entire ecosystem, Girolamo refers to the 16th century Italian mathematician, biologist, astronomer, physicist, and all-around genius of the same name. I really love the homage paid to some of the greatest thinkers in history within this ecosystem. Anyway, this Girolamo layer will connect the more private or closed enterprise implementations of IOHK's tech within the Atala Enterprise blockchain stack over to the public and open Cardano mainnet. This is a critical process in getting enterprises who traditionally like to play in the private domain to move towards the public domain a little more, much like the early days of the internet when we went from intranet to internet. By lowering the barrier to entry for enterprises to dip their toes into the public network through work that might have already been done by those enterprises on the Atala private network is a really smart move. And I also feel that this opens the door for hybrid architectures that allow enterprises to hold close some operations on the Atala network privately, whilst moving the greatest amount of transactional events and logic as possible to the public network. Enterprises can reap the rewards of finality and consensus on the public network without having to sacrifice some of the modicum of privacy that they need for certain operations within their business. So overall, I think this is a great move, and I think a lot of other platforms are starting to do the same if they have this connection point, like the baseline protocol for Ethereum. Really, really cool stuff, really powerful stuff. Now, as always, folks, if you do have time to stick around, I'm going to link up my most recent altcoin picks video here for you to watch. It's got a few altcoin projects that I think are really powerful. But regardless, thank you so much for watching, and I wish you and your family a safe and happy weekend and week ahead. And until next time, cheers.